Good morning, Campbell McCreary here, Amvest Capital in New York City. Welcome to the Amvest Capital Inc. live webinar with Piedmont Lithium Limited. Piedmont trades on the ASX and Nasdaq as PLL, Papa Lima Lima. We hope you'll enjoy today's program. It will also be available in replay mode. Feel free to chat in your questions in the question pane of the GoToWebinar control panel, or simply email them in. We'll try and ask the questions in real time. Amvest is a New York-based specialist investment management and corporate finance firm focused solely on the natural resources sector. All important disclaimer, this call is for informational purposes only. Very pleased to have with us today Keith Phillips. Keith, if you could share your screen. He's the managing director and CEO of Piedmont. It's a career spanning 30 years on Wall Street, during which he has worked on strategic and financing mining transactions representing over $100 billion in aggregate value. He was most recently a senior advisor with merchant banker Maxid Capital after leading the mining investment banking teams for Merrill Lynch, Bear Stearns, JP Morgan, and Dolman Rose Cowan. Following the formal presentation, members of Amvest Capital will ask questions of management, and we look forward to any questions that going to be sent in from the larger listening audience. Welcome to the show, Keith.
Campbell, thanks for having me. Can you see my screen? Everything's good?
Yeah, everything's good. Yep.
Okay, apologies. I'm going to try to minimize this screen. Let me move this off to the side here. First of all, thank you very much for having me. You guys, I really appreciate the opportunity. Amvest, I've known Campbell and Stewart for many, many years. You guys are the best at what you do. You get good companies and great companies on your webinars, and I think it's a great opportunity for us. It's a great, I think, opportunity for your audience. So again, as Campbell said, I'm Keith Phillips. I run Piedmont Lithium. We're advancing one of the world's largest lithium projects in the state of North Carolina, where all the world's lithium was produced from the 1950s to the 1980s. So I'm going to go through a presentation. This is a little bit of an update on what's on our website. There's no non-public information, but there is some updates on some market data and some recent activities. So Piedmont at a glance, we were founded 5 years ago in 2016. We're headquartered in Belmont, North Carolina. Belmont's the first town west of Charlotte, so 10-minute drive from the airport, 15 minutes to downtown. We're going to produce lithium hydroxide from spodumene in North Carolina. Those are very important subtleties we'll talk more about. Lithium's an interesting business. People are, it's really, to a large extent, a new business in terms of its applications to the battery business and electric vehicles. People are learning more about it. But if you take nothing else away from this presentation, other than we're going to produce lithium hydroxide from spodumene in the United States, those are very important points. We'll also have byproduct minerals that we'll be able to monetize, including quartz for the solar glass market, which is an important opportunity. 83% of the world's lithium hydroxide is converted and produced in China today. It's a big issue for Western OEMs in the US and Europe. We're going to do this in the United States, and obviously that's with supply chains being increasingly regionalized, that's a big advantage for us. We did make a strategic investment in Quebec in January, with an investment in a project called OTA that's controlled by a company called Sayona out of Australia. Quebec will be an important hub for lithium production going forward for sure. We're very happy to be kind of part of that, and that's a growing opportunity for us. In September, we did sign a sales agreement with Tesla to supply them spodumene concentrate. I'll talk more about that later on. That was an important accomplishment for us, and you enjoy that relationship with those folks. Sorry, and we raised money on the back of that and have now, as you can see on the right hand side, sorry, something in my throat, that seems better, $63 million of cash, more than enough to carry us through to a construction decision later this year. So on the right hand side, you can see we're listed on Nasdaq, as Campbell said, and also the Australian Stock Exchange. We were founded by an Australian entrepreneurial group. This data is updated for yesterday's closes. We've developed a lot of trading liquidity. So we're trading around $70 million US a day on Nasdaq, and we're also pretty liquid in Australia. Again, we have about 63 million in cash. Very strong research coverage. At the bottom of the page, you'll see 9 different firms covering our company now, all with buy recommendations on the company. So lithium supply is a critical issue for America. Again, 83% of the world's lithium hydroxide comes from China. The transport sector is increasingly shifting toward electrification. It's going to happen faster than people think. I'm a Tesla driver. Now, once you drive an electric car and you have the experience, you're never going to want to go back to an internal combustion car. So this is something that's happening. And importantly, lithium is the irreplaceable element of this whole process. So this is something Volkswagen says, lithium is the irreplaceable element of the electric era. You can't have a lithium-ion battery without lithium. You can have more or less nickel or cobalt or manganese or iron in your battery. You can't have a lithium-ion battery without lithium. It's irreplaceable. We have the only, we're going to produce our lithium hydroxide from spodumene in the United States. I'll talk more about that. That's the leading mineral source today for lithium, and it's preferred by a number of the OEMs, et cetera. So it's a big advantage. We have the only spodumene deposit that's being advanced in the United States. So on the right-hand side, you can see we'll very much be an integrated business covering the entire upstream of the battery supply chain. So we'll have a quarry in North Carolina. We'll concentrate our mineral to up to a 6% spodumene concentrate, which is the market standard. And we'll convert that in our own lithium chemical plant to produce lithium hydroxide. We'll then deliver that hydroxide through the supply chain, cathode battery and vehicles. It's interesting today, you have vehicle companies increasingly reaching back to procure the lithium, whether they plan to convert it themselves or not, because they're worried about the lack of availability going forward. Security of supply of lithium will be a very major factor for the next couple decades. For those that haven't followed it, this is data on the left-hand side from Benchmark Mineral Intelligence with their projection of electric vehicle penetration going from this is about 6-month-old data. They were projecting 3% in 2020, turned out to be 4.4% in 2020, far ahead of expectations. They're projecting a little over 10% in 2025. I think that will show to be very conservative, and not quite 30% by 2030. I think that will also be conservative. I have a phrase I like to use. I think demand for electric vehicles will go vertical once everyone understands the benefits and once the vehicles are available. Today, there are really very few vehicles available. The Ford Mustang Mach-E is just coming to market now. That's great. We got 3 guys on our team who have orders in for that vehicle. You're going to see whatever you drive, a BMW 5 Series, a Ford F-150, a Toyota Corolla, there will be an electric version of that between now and 2025. That's the car you're going to want to buy. It's going to be a better car. It's going to cost less. It's going to cost far less to fuel and maintain. We're also going to produce quartz. Importantly, about half of our production will be in the form of quartz, which will sell into the solar glass market, which is an important growth market for us as well. One of the big drivers of electrification and EV adoption is a little misunderstood. And there's a lot of understanding of government policy, penalties, and incentives. People aren't as attuned to what's kind of going on behind the scenes from an economic perspective. And fundamentally, economics will be what drives EV adoption in time. So on the left-hand side, you see lithium-ion battery costs have fallen 87% since 2010. Massive reduction. That's during a period of rising raw material prices. Lithium prices were higher in 2020 than they were in 2010. So were some of the other prices. It's really just based on scale manufacturing for the first time. The first large battery factory ever built was built by Panasonic and Tesla in Nevada 3 years ago. There are now over 150 large gigafactories, battery gigafactories, under development around the world. On the right-hand side, you see a chart that's one investor's interpretation of what the implications of battery cost improvement are for car prices. So this is from ARC Innovation in New York, a big investor in innovation themes, including Tesla. And they just show a standard, say, 250-mile range electric vehicle versus a Toyota Camry in gray. You see the Toyota Camry prices growing modestly over time with inflation, essentially. Internal combustion technology is essentially optimized. And you see what the impact is of electric vehicle prices falling. And they're showing kind of cost parity or price parity by 2023 on average. That could be right, I'm not sure. Tesla's already there. The Tesla Model 3 I drive is about $10,000 less to buy than the Audi S4 I used to drive. It's far less expensive to fuel and maintain. And it's a faster, cooler car, frankly. So economics will drive a lot of the buying decisions. There have been an immense amount of capital flowing into the capital market in the last year, all around the theme of electrification. I mean, of the two big mega trends that are affecting our business, one is the electrification of transportation. The other is the regionalization of supply chains, bringing things home. That's what we're going to do. But on this page, you look at a broad array of companies. In the vehicle box, you see Tesla, but a number of others who have come public via SPACs. Rivian is still private, but has raised billions of dollars. Aftermarket charging companies, components companies, like solid state battery companies, tens of billions of market cap between these, or hundreds, frankly, and none of it can happen without lithium. None of it can happen without the raw materials. So anyone who's playing the electrification theme, and I'd recommend you do, I think it's an unstoppable force at this stage, should recognize that lithium is the irreplaceable element. No one on this page, I don't think, will have EBITDA margins through the cycle higher than ours. We're modeling to have over 50%. And very few people on this page have the strategic moat that someone like Piedmont has, with the only spodumene ore body being developed in the United States. You can't just conjure one of those out of thin air. So high margin, strong growth, strategic moat attributes. We think companies like Piedmont should trade at a premium from a valuation perspective relative to a lot of these businesses. I talked briefly about policy before, so it's really, government policy is very positive toward electrification. There have been some announcements since this page was put out. That's true in the US, it's very true in Europe, and it's resonating with the companies. So GM aims to go all electric by 2035. They announced that last month. They will sell no internal combustion cars beginning in 2035. Ford announced they're doubling their electric vehicle investment to $22 billion through 2025. They also announced they'll sell nothing in Europe other than electric vehicles starting in 2030. So this is a trend that's was a sort of a trickle a year or two ago, and it's now kind of a tidal wave coming. Demand growth for lithium is strong. Obviously, if you need more electric cars, and they all need batteries with lithium, you need a lot more lithium. So you see the trend here of lithium demand going from around 350,000 tons last year to 8 or 9 or 10 times that by 2030. And importantly, on the left-hand side, you see this, it's a stacked bar chart. Lithium carbonate is shown in gray, lithium hydroxide is shown in blue, and the blue bar is growing because lithium hydroxide is growing. And fundamentally, these are both, white powders that are produced in similar ways from similar raw material. But fundamentally, lithium hydroxide is what you require in longer range vehicles. So if you're Tesla or Mercedes, and you want your vehicle to go further and have longer range, and that's a very important marketing point in the electric vehicle business, you need to put more energy density in every battery cell. You need to have, and to put more energy density in the battery cell, you need to put more nickel in the cathode. When you put more nickel in the cathode, you need to use lithium hydroxide. You can't use chemically lithium carbonate. So hydroxide is expected to grow more rapidly than carbonate, although carbonate will grow strongly. And we're going to produce lithium hydroxide. It's generally a faster growing business, and lithium hydroxide generally trades at a premium. And importantly, I can't say it enough, China currently produces 83% of the world's lithium hydroxide. We're going to produce our hydroxide from spodumene. So today, roughly 60% of the world's lithium is produced from a mineral called spodumene, generally produced today in Australia. All of it is converted in China. The other 40% is produced generally from brines in Chile and Argentina. And what we've seen, two important factors. On the left-hand side, you see quotes from people like VW and BMW, where they express their preference for hard rock sources of lithium from a sustainability perspective versus brine. So VW, lithium extracted from mining is more stable to extract, easier to scale, and generally more sustainable. And then BMW at the end of 2019 signed a contract with Ganfeng for what they describe as sustainable lithium from mines in Australia, i.e. spodumene. So that's good for us. We've in talking to OEMs, people prefer spodumene sourced material from a sustainability perspective. It's also far easier to scale. This is very straightforward quarrying with simple concentration. None of the cyanide leaching you see in the gold or copper business, none of that. It's very friendly, clean, relatively straightforward to do. Unfortunately for the world, there's not that much of it in the US. We have the only big deposit that's being developed. On the right-hand side, you can see spodumene is also considered to be a lower cost source of lithium hydroxide relative to brine. From a brine project in the Atacama, the first thing you do is produce lithium carbonate. Chemically, that's the process, the flow sheet. You have to produce lithium carbonate first, which you could either sell or you can spend a couple $1,000s to convert to lithium hydroxide, which is what Livent does. They're a very large producer. That increases their cost, but they then get to sell the higher priced hydroxide product. From a spodumene quarry, we produce a mineral concentrate called spodumene concentrate. And from that, we could produce either the red bar carbonate, or we can produce hydroxide. All the spodumene guys will produce hydroxide because it's premium priced. This is a chart from McKinsey. Suffice to say, we think we'll be lower cost than is indicated here, but spodumene is preferred in every respect. So we have the only spodumene project in the United States, and by definition, we're the only ones that plan to produce lithium hydroxide from spodumene in the United States. Our project has a very clean profile, and this is important. It's important to investors. It's important to customers. We're doing a lot of work. We'll have an announcement, hopefully in about 30 days, on some important initiatives with respect to our products. I mean, first and foremost, we're going to produce lithium that enables the electric vehicle revolution. That's very important. But we're going to do it in a very clean way, and I would highlight a couple things. We're going to transport our mineral concentrate 20 miles from our mine site to our chemical plant in Kings Mountain, North Carolina. Today, 100% of the spodumene is mined in Australia, put on a truck or rail to the coast, shipped to China, and then taken inland in China. It travels at least 5,000 miles. So we're going to dramatically reduce the transportation footprint and kind of tighten the supply chain. And we're also going to be introducing a lot of initiatives in the mining side of our business that'll be really beneficial. Now, we did sign a sales agreement with Tesla to supply them spodumene concentrate. It's a 5-year fixed price agreement. Shipments will commence at a date to be agreed between the two parties between July 2022 and July 2023. That's something we're working with them on now. Very exciting for us. The reason for this supply agreement, Tesla, obviously they make vehicles. They also make batteries. They're going to begin to make some of their own cathode material and lithium hydroxide. They're going to initially do the lithium hydroxide with our spodumene concentrate. So as they are doing the test work before they build their plant, there's a lot of interaction. So it's become a nice relationship, and we hope to build on it and ultimately also sell them lithium hydroxide if they'd like. We've got an exceptional management team, and it's growing. And I say exceptional, not present company excluded. We have a lot of people experienced in the lithium business from places like Livent and Albemarle. And we have a lot of people experienced in building projects. So in our business, as you know, you go from exploration to sort of development to construction to operation. I would argue, operation, once you have an asset running, is that can take care of itself. Construction's where a lot of the challenges happen. Patrick Brindle and Jimmy Nottingham have built tens of billions of mining and industrial concentrate projects over the last couple decades. Pratt Ray, who joined us last year, as a production manager for us. He spent 30 years at Livent in their Bessemer City plant producing lithium hydroxide and carbonate from brine, but also from hard rock when they did it. And he was described by David Buckley, our process engineer, as the best operator Livent ever had. So it's great to have him on board. We're building that team out. There'll be more to come. And we have world-class partners on the technical side. One thing I learned as a banker, if you want to bring good investors into your project, you have to associate with the best and brightest technical consultants to develop confidence in your project. Kind of a simple map of where we're located in Western North Carolina, and there's a handful of important things here. And you see Sayona up in Quebec. We're surrounded by potential customers, car companies, battery companies, cathode companies, a lot more cathode and battery activity to come here in the US. And we're just across the ocean from Europe, huge market, the biggest EV market in the world today, growing very rapidly. The logos on the European side of the map are all cathode and battery plants being built, big investment going on. They need lithium hydroxide. Right now, the default source is China. We're talking to a lot of these people. We think we'll be a good supplier over there as well. But I would contrast this with two important markets. So Australia makes 55% of the world's lithium raw material, the concentrate. Chile produces another 25% in carbonate form from the Atacama. Neither Chile nor Australia have a single automotive plant. It's hard to believe, but so 75 or 80% of the world's lithium raw material is produced in countries that don't have any car plants. So by definition, they're exporters. They generally export to China. The Chinese do a good job converting, and the material gets onto the world market. We think increasingly, you could imagine anyone on this map would rather have a tighter supply chain for all kinds of reasons. Political risk, tariffs, weather, inventory management, et cetera. So it's an exceptionally advantageous location. And again, we're the only folks with a spodumene deposit kind of in the United States. We believe we'll be a very low-cost producer. This is important. And this is, so a few subtleties here. This is a lithium hydroxide curve, forward-looking, produced by Roskill. Roskill is one of the leading chemical industry consulting groups. They have a big team focused on lithium. And this is a forward-looking curve because not many of these projects are building yet. But if you think about it, across the x-axis, you have the scale of a project. So at 22,700 tons, we're a big project. And the y-axis shows the all-in sustaining production cost, with us being the lowest. And I'd highlight that the red bars are Chinese converters. So these are folks that don't have their own raw material. They're paying market for the raw material. So the big costs of producing lithium chemicals are your raw material cost plus your conversion costs. The Chinese have a competitive conversion cost, but they have very high raw material costs. So they're the world high cost producers, which is great from our perspective. The light blue bars represent other projects, generally spodumene projects in places like Australia or Northern Canada, which have, in some cases, attractive ore bodies, in other cases, not so attractive. But fundamentally, they're going to be higher cost than us because of the reasons on the right side of the page. Just comparing ourselves with the Australian spodumene producers, where all the spodumene is mined today, and the number of projects are coming forward. Labor costs are far higher in Australia, generally because the locations are remote. Where the mineral sources are in Australia, nobody lives there. They have to fly in their workers every 2 weeks, house them, feed them, have medical staff, et cetera. Electricity rates are triple in WA, in Western Australia, the state of Western Australia, than they are in North Carolina. Natural gas costs are double. I said we're going to transport our concentrate 20 miles from kind of mine to chemical plant. In Australia, many of the projects ship hundreds of miles to a potential chemical plant in Australia, or they ship 100 miles to the coast and then north 5,000 miles to China. So that's a big cost implication. This is heavy material you're shipping. There's also a 5% state mining royalty in Western Australia. We don't have that in North Carolina. We're operating on private land. We're going to own our own property. And we have byproduct credits the others don't have. Candidly, I think this chart understates our cost advantage. And that's obviously a big advantage for us. We've been moving very quickly. The company's 5 years old. It takes a long time to develop these projects. We've done an immense amount of exploration work. We've drilled over 70,000 meters by now, which is a lot. We've proved up a big resource. We're now focused on getting to construction. So we're working on the definitive feasibility study for the integrated project. That should be completed in Q3 this year. We're working on lithium and byproduct sales agreements. Those, frankly, are a little less important to me today. Markets are tightening. It's becoming more and more obvious there'll be a shortage of lithium hydroxide in the next several years. Our timing is going to be excellent. My view is the buyers are going to come to us. We no longer need to kind of force ourselves on them trying to get offtake agreements in place. I think we're better off being patient with that. We are going to launch a strategic partnering process, which will help us fund the project. We've got $545 million of capex for the project. We'll launch that process shortly. There's an abundant amount of strategic interest in businesses like this. I spoke to a CEO of a chemical company who said, why wouldn't everyone in the chemical industry want to invest in lithium when you're going to have 40 or 50% EBITDA margins through the cycle and 20% top line growth? There are no other businesses like that in the chemical world. Same is true for energy companies who are looking for cleaner investments. So we'll be constructing starting hopefully the end of this year and hopefully producing spodumene concentrate as early as late 2022 and hydroxide in 2023, and then ramping up from there and considering expansion options. This page is a little out of date. I think it's fair to say all the numbers have pretty much moved up, but we've accomplished a lot as a company. We've built a very strong leadership team. We're first mover in North Carolina. We think the best place in the world to be in this business. We have a large high-grade mineral resource. We've received the federal permits we need for both our mine and concentrate operations and also our chemical operations, very important accomplishments. We demonstrated exceptional economics. You saw the cost curve at a PFS level. We'll be bringing the DFS later this year. We did sign a sales agreement with Tesla, and we made a nice investment in Quebec. This year, we're re-domiciling. We're currently an Australian corporation, so we're re-domiciling the company to become American. We hope to complete that process by the end of April. We'll still be listed both in Nasdaq and in Australia, but we'll qualify for the Russell 2000. We'll qualify for a lot of ETFs we're not in right now, et cetera. We're drilling today. We're trying to expand our mineral resources. I think that will happen. We'll complete definitive feasibility studies in Q3, find customers for our product, complete the strategic partnering process, and grow the business from there. There's some fine companies here: Lithium Americas, Livent, and MP Materials. I think they're all undervalued. I just think we're a lot more undervalued. I think this is a gap we can close over the next several quarters. In summary, why Piedmont? This is a massive market with high growth. The total addressable market for lithium exceeds $50 billion. And when we electrify the fleet, that's happening. We're going to produce the right lithium materials, lithium hydroxide from spodumene concentrate, very important. We're going to do it in North Carolina and in the future in Quebec. We have a very large project, exceptional economics, and the project's moving quickly. We should be into cash flow in 2023 and kind of growing from there, and strong customer relationships. So Campbell, that's high level presentation. Happy to take any questions from you or people in your audience.
Thank you. Well, please just message in your questions and we'll get to them. On lithium, how elastic is demand? So how much, like, I guess so much is the quality and where you are and consistent supply. When would prices bring substitution, or people want a different supplier because it's just so much cheaper, and just maybe they'll use something else besides lithium?
Well, great question. I've been in this job 4 years. I've never been asked that question, but it's a great question. And you had several levels to it. First of all, there is no substitute for lithium, full stop. There is no substitute for lithium. So there is a substitute, say, for cobalt. And I like nothing wrong with cobalt, but every car company is working hard to thrift cobalt out of the cathode material, because it's not that it's scarce geologically, it's equally abundant with lithium, but it almost always comes with at a copper or nickel mine. So nobody's building pure play cobalt mines. They basically don't exist. The economics have to work for the nickel or copper project.
Comes from the Congo, right? It's kind of
two-thirds of it's in the Congo. So there's no substitute for lithium, to be crystal clear. The substitute for lithium is a gasoline car, basically. So there's really no substitute. So I was on the phone last week with a big institutional investor who's a big holder of Tesla and big believer in the theme. In his view, lithium hydroxide prices today are 11 or 12,000. And his view is lithium supply needs to be 2 million tons by 2025. And I said, well, and we're at 350 now. I said, that's physically probably not possible. The mines take time to develop. He said, no, it's possible. Prices just have to go to $20,000, $30,000, $40,000 a ton to enable that. And in his view, they will. And that's the most bullish outlook I've seen. But he's a big investor with a lot of money, so I tend to listen to him. I think prices are strengthening, and I think you'll see fundamentally, I think, is my screen still being shared?
Yes, and please leave it up. Yep.
Yeah, I'm just trying to find. So here's a chart that shows. It's kind of interesting for people. So in an 811 battery cell, 811 means 8 in the cathode, 8 parts nickel, 1 part cobalt, 1 part manganese. About 22% of the cathode. So a battery has a cathode and an anode, and electrolytes, et cetera. But then there's a lot of manufacturing that goes in. About half the cost of a battery cell is the cathode. 20% of the cost of the cathode is the lithium in an 811 cell. So I guess that makes the lithium as much as 10% of the cost of a battery. The battery is, say, 40% of the cost of a car. So the lithium is 2, 3, 4% of the cost of a car. So if lithium prices doubled, that would be, that'd be good for us. Be unfortunate for the automakers. And I'm not suggesting lithium prices will double, but I think they easily could. And as you go back to this page, sorry, let me find it here. This is really important. These battery costs are still falling 13% a year. When I started this job in 2017, the battery pack in a Tesla Model S cost was half the cost of producing the car. And if you look at prices, battery costs going from 221 to 137, I don't know, what's that, 40%? So the battery pack no longer costs 50% of the cost of the car. Maybe now it's 30, 35. They're falling, and they're falling because you're having the smartest people in the world at companies like Tesla and LG and Panasonic, et cetera, build state-of-the-art large battery manufacturing plants. So the raw material, I think, will become less and less important as an overall part of the pie, or become more important as part of the pie, but the manufacturing costs shrink. And I think the market can comfortably accommodate it.
Okay. Moving in a little closer, can you say something more about the binding agreement with Tesla? And this investor comments, First shipments 22, 23, and then timeline, commissioning production mid-22 to end 24. Isn't that a very tight timeline? Certainly contains this precise specification that must be adhered to. Can all the tests be carried out before then?
Yeah, so the bottom line is there's not much more I can say, but I can comment on that question. We've been, for a variety of reasons, relatively vague about some of the details, but it's a binding agreement. It's a 5-year term with extension options if we both want to, at a fixed price. And the first shipment date we decided would be sometime between July 2022 and July 2023, and that was really, but it's a date we're in discussions on. And at this stage, it would be too late to sort of accelerate it and go before July 2022, but we could both agree if we want to make it even later than July 2023. Fundamentally, we're going to build a spodumene mine and concentrate plant. They're going to build a chemical plant. We're also going to be building our own chemical plant. The chemical plant takes longer to build. So as a general matter, I mean, Tesla moves fast. They built this plant, this automotive plant in Shanghai in 11 months. I don't think any other OEM could have done that. But generally speaking, people think it takes a couple of years to build a chemical plant. It takes less than a year to build a mine and concentrator. As far as I know, they haven't started construction yet. They're still working on some test work with our material. So I think whatever date we agree, we'll be able to accommodate comfortably. We feel very good about that. I think they feel good about that as well. And the only other thing I'd say is, there are a number of spodumene suppliers today in Australia. There are some prospective suppliers in places like Quebec and Brazil and parts of Africa. And I believe they said it publicly. I think for Tesla, they have a view that supply chains should be regionalized where possible. And we have the only American spodumene deposit. So they decided to have spodumene. If leaving Tesla aside, if you're going to build a hydroxide plant, say in Europe, and you want a spodumene supply, or let's say you're going to build it in South Carolina, if you have spodumene supply from Australia, you're going to get a shipment once or twice a year. You're going to have to maintain a lot of inventory. You have to have a lot of advanced planning, a lot of working capital, a lot of management. We can send rail cars in every week or two. We can manage that inventory for a customer here, which is a big advantage.
Okay. What is the average grade of the spodumene deposit?
Our grade is, our resource is 27.9 million tons at 1.11%. So rounded 28 million tons at 1.1%.
What is the tonnage amount you are permitted to produce from the mine?
So we have, there's permitting at different levels. So we have the Section 404 permit from the Army Corps of Engineers for kind of water management, essentially for the mine and concentrate operations. And we have the air permit we need for our chemical operations from the EPA. We haven't even yet applied for our local state mining permit, but we will, and we'll do that soon. We've been working with those authorities for 3 years. We're just, frankly, as we build a bigger land package and drill the resource out and hopefully make it bigger, the numbers are changing a little bit. We think that's a timeline that's very comfortable, fits our timeline very comfortably. So we're kind of waiting till we have all our ducks in a row before we apply for that permit. But it'll be, certainly we intend to permit what we, at a minimum, what we have in our current studies, which is 1.1 million tons a year ROM, 160,000 tons a year of concentrate. And we're evaluating that number as we speak.
In the pilot plant program, have you got a chance to test all aspects of the processing? How big was the sample? Have you finalized all bench scale pilot test works?
We have. So the pilot plant work is all done up in, we've been doing it at SGS Labs in Ontario. They've done all our work with our assays. They've done all our work with concentrate production. We produce a lot of concentrate. We've shared that concentrate with a number of people. There are a number of different ways to produce lithium hydroxide from spodumene concentrate. There are different flow sheets. So we've done bench scale work with SGS, converting our own spodumene using the traditional sulfuric acid roast process. We've also obviously been supplying spodumene concentrate samples in scale to Tesla for their own test work process, and they've been looking at a few different flow sheets. So that's ongoing. I'd say it's very advanced. It's interesting. I had an Australian shareholder ask us 6 or 9 months ago, why do we do a bulk sample to do spodumene test work? Because the Australians never did. And Our reaction was, well, the Australians didn't do it because they were in a hurry. Spodumene prices were $1,000 a ton. They were in a race to be first, and they all have struggled. One of them hit nameplate capacity in 6 months, that was a project kind of built and operated by Primero, who's our EPC contractor. The others struggle to this day, have still not hit nameplate capacity. They didn't do the test work they should have done. We're doing it. It's not inexpensive. We've spent millions of dollars on test work, but it's really important. We're going to spend $545 million on our project. We want to make sure it works. One other thing I'll say is, on the concentrate side, being a second mover has a big advantage. The guys in Australia move very quickly. And again, there's been spodumene concentrate mining for decades in North Carolina, years, but it stopped in 1999. So all the current activity essentially is in Australia. And 3 big mines started up in 2017, 18, and they all raced to construction, and they took some shortcuts and they didn't do much test work, and the recovery's really struggled. We've visited all those sites. We know what happened at all those, and we're not going to make those mistakes. Big advantage for us.
Okay, thanks, Stu.
Campbell, let me add one more point about that.
Okay.
So about test work. So one thing we've learned is we have some really significant inherent advantages of our location from a recoveries, from a processing perspective. I'll focus on 2. Number 1 is 100%. We talk about spodumene, so that's the mineral that contains our lithium. There are other minerals that contain lithium. There's lepidolite, there's petalite, there's inwaldite, et cetera. 100% of our lithium resource reports to spodumene. That's not true of virtually every other or any other spodumene deposit. In many cases, we understand the lithium reports to 60, 70, 80% spodumene, 20, 30% something else, petalite or lepidolite generally, which is fine. But if you only build a spodumene concentrate plant, you won't recover the lithium. At least you won't recover much of it from the petalite and lepidolite. They have different specific gravities. So we have what I describe non-technically as a pure spodumene ore body. Massive advantage. A CEO in the industry who knows this stuff says he thinks the only other one in the world is Greenbushes, which is the big gorilla in Western Australia. Huge advantage. The second big advantage is the quality of our fresh water in North Carolina. SGS Labs in Lakefield, Ontario. I grew up in Ontario. Up there in Lake Country, they have beautiful, clean, fresh water. When we did our test work, their spodumene concentrate test work with their water, we sent up samples of our water and they did it again. We had even better results from our water. It's very clean. It's excellent. In Western Australia, where all the spodumene is produced, at one of the projects we visited, Western Australia is basically a desert. So they're pumping water from kind of aquifers below. The salinity of the water at that site is 9 times the salinity of the ocean. So they have to have a desalination plant. So they take really, really bad water and upgrade it to just really bad water. And that hurts their recoveries and it hurts their product. They end up with a concentrate. It's like a sand or a gravel. It's not 100% dry. There's moisture content to it. And that moisture content is dirty. And it's, at least in this one case, and it's an issue we've been told by one of the Chinese converters. It makes it harder for them to convert that concentrate into hydroxide. It's doable, but it adds extra steps. So pure spodumene ore body, clean process water, huge advantage. We'll have better recoveries because of that. That's what our test work proves. That's what we know happened historically in the region. We have people on our team who were part of those teams. A big advantage for us.
Thanks.
Yeah, thanks for the presentation, Keith, and yeah, congrats on the offtake with Tesla. Obviously, it's hard. Well, you probably set the standard for the first, junior mining company to secure an offtake with an end user, an OEM user, sorry, and balancing that juggle between Tesla want to keep things quiet and then disclosures from a public mining company point of view, and yeah, so back on recoveries. So, compared here, remember when I went to site a few years ago, it was the big comparison to the Aussies was the level of mica and iron in the deposit. It's higher in Australia, so the recovery is lower there. If you could touch on, how recoveries have improved from your point of view over the last couple of years of test work.
Yeah, I think I wouldn't say they've improved. I would say we've confirmed really high, really good recoveries, which is good. And we think we've been conservative in our estimations. Time will tell. I mean, these projects aren't easy. We're confident we'll have higher recoveries at the concentrate level than, well, we're not aware of anyone that should have higher recoveries than ours. So, it's a big advantage. We've done an unusual amount of test work to confirm that. That was helpful, candidly, in the Tesla discussions because we have material we've tested. We've got these big bulk samples, which some others hadn't done. So it's really important, and I've learned a lot. I mean, I was a banker, as Campbell said, and I didn't really appreciate how important all this test work is. It's important ultimately to the customers. You can't sell something that doesn't qualify, and it's just important for the whole process. So we've done a lot of that work. I feel really good about it. You know, people ask me, what do I lose sleep about? What causes me to lose sleep at night? To me, there's nothing about our project. The project has no fatal flaws. It's the best located project in the world by far. It's spodumene, which everybody wants. It's exceptionally high quality ore body from that perspective. The grade's good. There are higher grade assets, there are lower grade assets. The grade is good. The location's exceptional. Costs will be very low. Recovery is very strong. What keeps me asleep, make me lose sleep at night, is kind of maximizing the opportunity. It's difficult to grow. You know, if you wanted to go stake some prospective lithium ground in WA or in northern Quebec, you can go on a government website and in 30 minutes stake a lot of land. We're literally getting to know our neighbors. We knocking on doors, trying to expand our footprint. We've done a good job. We've gone from an initial 415 acres to over 2,000. We think we can make it a lot bigger. The world's going to need a lot of lithium. There's no better place to produce it than North Carolina. There's no better thing to produce than lithium hydroxide from spodumene in North Carolina. And we're passionate about making it as big as we responsibly can, and that's something we hope to have continue to deliver.
Yeah, and then a bit of history of this area. So, this was America's first lithium operation back in the day, wasn't it? The FMC in Albemarle, and then they moved focus to Latin America. If you could touch on their reasons to moving there, and now how they've come back, because I know they hadn't done any drilling in this area near the Bessemer mine in Kings Mountain for years.
Yeah,
which allowed you guys to get in there.
No, I appreciate it. So on this page 20, you see the city of Charlotte on the right-hand side of the map. So Charlotte's a city of 2.5 million people. It's the second fastest growing city in America. It's a boom town. We're 30 miles west is this long mineral belt called the Carolina Tin Spodumene Belt. It's a very famous belt. It's considered one of the 3 biggest spodumene belts in the world. You know, if we owned it all, we'd have $1 trillion market cap, but we don't. So it's it is a very large mineral belt, and essentially all the world's lithium came from this belt from the 1950s to the 80s. You see 2 mines here. I don't know if you can see my cursor. This is the old Hallman beam mine that was operated by a company called Lithium Corp of America. It's now Livent, a public company on the New York Stock Exchange. They operated this for 43 years. 3 of the people who worked here in important roles work for us now. They shut it down in 1998, 1999 when it was essentially depleted. And remember, when they were producing lithium here, there was no Tesla. There were really no electric vehicles. Nobody was really talking about electric vehicles. So after 43 years of mining, the good stuff was gone. The pit was quite deep. It was getting higher and higher cost. The demand wasn't really there. They shut that down. They actually sold it, so they don't own it anymore. Down here in Kings Mountain, Foot Minerals, now Albemarle, had this pit. It operated for about 30 years, shut down at some point in the 1980s. They have done drilling there. They were drilling there pretty extensively in 2018, 19. And our sense is, even though the best might be gone because it's, they mined for 30 years and the shallow stuff is the lowest cost, there's probably, our guess is, and they've sort of indicated that there's probably a lot more lithium there, and that's good. The world's going to need it. We'd be happy to see that developed in time. It's not their current focus. There are a couple of reasons for that, I think. If you look here around the kind of west and north part of the ore body, this greenscape, that's the old waste rock stockpiles from this mine. That was given away by Albemarle to the town of Kings Mountain. It's now a park. They're not getting it back, I don't think. So it's now a park. They're generally landlocked. Their chemical plant is over here. There's a big quarry of some other description over here. And so we'll see. I think it has development challenges we don't have. It's also, you can see here, a town of Kings Mountain. There are 10,000 people who live there. We have a far more rural location where we are, which is an advantage. But when these folks each essentially depleted their resources, They went to Chile, Albemarle did, and Argentina, Livent did, to produce lithium from brine, when carbonate was the market people wanted, and brine's the cheapest way to produce carbonate. And Livent gave up their ore body, and Albemarle essentially mothballed it. I think they don't have a mining license there anymore, or mining permit anymore. But they kept their chemical plants here, so this is important. Bessemer City, Livent has a big chemical plant in Bessemer City. They import carbonate from Argentina to be converted to hydroxide here and other things. Albemarle still has a big chemical plant in Kings Mountain. We plan to build our chemical plant just down the road in Kings Mountain. Exceptional location, 20 miles from our concentrate site. So because of the 70+ year history in the region, there's more lithium processing talent on this map than anywhere else in the English-speaking world, and it's really not even close. So that's great for us. We've been able to build out our team with some of those people. We'll have a lot more jobs to offer. There'll be more spots available, and it's a very fortunate location. And I would just contrast this. I mean, if you think about some of the assets, say in northern Quebec or Western Australia, they generally don't have two major railways within a mile or two of their projects. They generally don't have a major airport, major interstate highway. Lots of people who can drive to work happily, good weather, good regulatory environment, et cetera. And I would also add, I know you got some mining oriented investors on the call. North Carolina is the #7 mining state in the country. There's a lot of activity in North Carolina, particularly industrial minerals. All the high purity quartz in the world pretty much comes from spruce pine, but 50 miles, 75 miles west of us, a lot of other industrial minerals activity. It's a wonderful place to operate.
Most definitely. And then the growth you talked about, the investment in Sayona mining. If you could just touch on that, and if there are any, you'd be looking at other opportunities as well in the Americas, North America region.
Yeah. So listen, we've been thinking a lot about growing our business, and the two ways we grow our business. Number one is we build out a bigger mineral resource. We get more land, we drill it, and we're working on that. And I think that'll be a constant theme for this company. I think the 28 million tons at 1.1% will grow. But the market's going to grow probably more quickly than we can grow our resource. So there's no reason we couldn't become, say, a merchant converter and convert third-party spodumene. So that's something we've been looking at pretty hard. We've had discussions with 8 or 9 possible suppliers from 4 or 5 different countries, and we had a really good conversation with Sayona. They have a good ore body in Quebec. It was an undiscovered gem in the capital market at the time. We had an opportunity to A, secure spodumene concentrate to kind of bring it down to North Carolina, and B, make an investment in that company, which we thought was undervalued, and we've been rewarded so far. It's been a good investment. As has been made public, it's well known. There's a neighboring asset, it's 30 miles away, but that's essentially neighboring in the world, called North American Lithium, which is for sale out of a bankruptcy process. We think Sayona is an excellent buyer for that. We think there's some real operating synergies, which are rare in the mining business, to put the two ore bodies together, essentially, from a processing perspective. That's something, so we'll see what happens there. That would be excellent. And if that happens, you put Sayona and North American Lithium together, you have a totally world-class, large, well-located operation or opportunity in Quebec. Val-d'Or is a big mining town where Agnico has a lot of people, Cisco, et cetera. That's where these assets are located or nearby. It's a great place to be. So yeah, Stu, we are looking at other things. I wouldn't say we're looking aggressively. We're particularly focused this year in executing on our plans in North Carolina. We think it's the best lithium project in the world, and we think we'll be rewarded if we develop it responsibly and kind of economically. So we're very focused on that, but aware that we can grow the company overall if we can get additional spodumene supply.
Yep, gotcha. Thanks for that, Artie.
Thank you. How long do you think the project construction will take? And in your opinion, what items or processes will be critical in terms of timing of that?
So here's so we basically show a construction process of around 2 years, and we'll see when we actually get started. We're currently planning to start the 4th quarter of this year if we get everything done. That 2 years is a pretty safe estimate for how long it will take to build a chemical plant. Spodumene concentrate plant we think could be built in we're confident it could be built in less than a year. And there are certain long lead time items in the chemical plant We'll need a kiln. Kilns have a gather pretty lengthy lead time, but we don't need to have it there the day we start construction. We need to have it there during the process. There is some land we need to procure. So if you think about our ore body is essentially this blue. We have all the land we need. We control it all through leases with options to buy. We need to execute on those options. And some of it we've already done, there's more to do. And some of them have notice periods. So if we have an option to buy your property for $1, we might have a 6-month notice period or whatever. So we need to exercise that. We need to get that. So we're focused on that. 28 million of the capital in our mine and concentrate operations is for land purchases. We're chipping away at that as we speak, but that's part of our ultimate 545 million of capital. So there's a series of long lead time items. There's nothing in particular that concerns us. The team we've assembled is doing a great job with the planning, and I'm comfortable we can meet this timeline. I will say one other thing. In our current model, in our pre-feasibility study, we assume a construction period. We then assume a commissioning and ramp period. And we assume currently 2-year ramp up in our chemical plant, which, we used to assume a 3-year ramp up. We now assume a 2-year ramp up. We're told that we're told by people in the industry that we should be able to ramp it up comfortably in less than a year, which would be good. I'm aware that some other people who have done studies have assumed a ramp up period of 0 days. They just assume they turn it on and it works. We don't expect that to happen, but we do think there's probably some upside in speeding, from construction, speeding, the period to get to nameplate. That's something we'll be focused on in the DFS.
And regarding the cost curve you showed to us, do you expect a change in that in the future? And in your opinion, what can disturb and change that curve?
The cost curve?
Yes.
Yes, the short answer is yes. It's a very interesting question. I was asked by a big investor about a year ago on one of my last physical meetings. I'll never forget. He said, the problem with lithium is I think the cost curve is going to compress and costs are going to get lower. And I said, no, that's not how it works. There's zero chance the costs get lower. I mean, we can all make improvements and tweak this or tweak that. Unless people start discovering 3% Li2O spodumene deposits, which no one's ever done before, the costs aren't getting lower. There's generally going to be cost inflation, I think, in a lot of these areas, particularly in 2 particular areas I'd focus on. So on the red bars here, the Chinese converters, this cost curve assumes a certain spodumene concentrate price. I don't know what it assumes, but there will be times when spodumene concentrate prices are higher than our underlying here. They have to buy spodumene concentrate at market. That's the way it works. So I don't know what price is assumed in here, but I think it's safe to say, spodumene prices have gone up 25 or 30% in the last quarter. They're still half of what they were at the prior peak. So to the extent concentrate prices go back, the Chinese converters costs will be going up just because of that. And then in Australia, what's interesting, most of the light blue projects in Australia is WA, it's a big place physically. There aren't a lot of people there. There's a lot of competition for the talent. I think the population of WA is 2.2 million, if I'm not mistaken, but it's a massive area. And there's a lot of mining activity, and there's a lot of competition for all the same skills. And when the gold business heats up or iron ore heats up, there's increasing competition. We don't have that issue in where we are in Charlotte. There's 3.5 million people live in the Charlotte area, maybe more. There's 3.5 million people within a 30-minute drive of our site. I don't know how many of those are in the mining business, but it's probably less than 1%. Whereas in Western Australia, it's a big number. So the idea that there'd be local labor cost inflation, that's something we're not going to face in nearly the same way. So I think we feel good about our numbers. One other thing I should mention, we're I think the only project on this page that's American. All these costs are in US dollars. The Canadian dollar, Australian dollar have appreciated very considerably since this was all done. We haven't updated any of this, but we'll be checking what those numbers are when we next update this for the DFS. But all the Australian costs are up. All the Canadian costs are going to be up in US dollar terms, and ours aren't. So that's good for us.
Thank you, Keith. Campbell?
Sure. So I've got a few more questions, but we're almost at the end of our hour, and I promised we'd be less than an hour. But thank you for sending these questions in. So very quickly, is lithium more important than class 1 nickel and carbon in electric vehicles, and how important is graphite?
Good question. I'd say all of the above. Everything's important. So, I mean, lithium is, lithium's irreplaceable. You need to have it. Every lithium-ion battery will have a certain amount of lithium in the cathode, full stop. And then as we evolve to solid-state batteries, where you have a lithium metal anode, the lithium demand will go that much higher. So lithium's a great place to be. Nickel demand in EVs is increasing as car companies want to have longer range vehicles. They need to use more nickel in the cathode. So there will be, I don't know what it'll be, 60–70% of the batteries probably down the road will be kind of high nickel cathode, longer range batteries. And there will be maybe a third that don't use any nickel at all, where they instead have lower range, but also lower cost. So people are focused on that. Graphite's essential for the anode side of the battery. That's not true if we move to a solid state world, which some people think. I think that might happen in times probably quite a ways out there. So I think those are three. I think lithium, nickel, and graphite are three astute places to focus.
Excellent. Again, what's the current grade and tonnage of the deposit?
28 million tons at 1.1%.
How likely is near-term share dilution necessary to fund future operations?
Yeah, we raised money in October. We were sort of ahead of the curve. We did a good financing. We raised a lot of money, so we don't have any plans to raise money today.
What is the thinking or perhaps time frame for getting the remaining planned production placed via offtakes? Would you consider an offtake joint venture structure?
We would consider offtake/joint venture study. We will be appointing bankers here shortly to help us get to the C-suites of the big car companies, battery companies that we don't know currently, chemical companies, energy companies, et cetera. So offtake may be part of that. It might not be. Time is on our side, frankly, is our view with respect to offtake. And I think it's clear to us that there will be a shortage of battery quality lithium hydroxide coming soon and lasting a long time. And anyone who can produce it in a place like North Carolina will be in the catbird seat. And the longer we wait to put in place offtake, the better results we'll probably get from here. So that's kind of our philosophy at this stage.
Okay. 2 questions. What's the total CapEx again, and what does it mean when you say spodumene lithium is more sustainable than brine lithium?
So the total CapEx is $545 million. So it's $168 for the mine and concentrate, $377 for the chemical plant, $545. That's at a PFS level. And when I say it's more sustainable, I'm really quoting VW, who said it's more sustainable. I don't have the skill set to know, but I think the fundamental difference is the impact on the water supply in the Atacama Desert. So what happens in a brine deposit? You're pumping brine water from the aquifer in the world's driest desert. You're pumping it to surface and you're purposefully evaporating it. So the good news is you use the sun to evaporate it, so it's got a relatively low carbon footprint. The bad news is you're literally evaporating water in the world's driest desert. There happen to be other people who live there and who want to maximize their fresh water and are worried about that, are worried about the impact on their water supply, their agricultural interests, et cetera. So it's an issue that's kind of above my pay grade, but the car companies are focused on it. A lot of people are focused on it. I think in my view, I think brine activity will continue for sure. I think there will be limits on the ability to grow brine production that we won't have with spodumene.
Okay, 3 more questions and then we'll close. But yeah, this is so interesting. We've got such great questions, so I want to get to all of them. Any comments on progress with hydroxide U.S. offtake partners like LG in Michigan, SK Innovation in Georgia? Recent court ruling against SK limit your potential customers?
No, we know SK and LG well. We were in Korea 4 times in 2019. I guess we haven't been since because of COVID. We know them both well. We know a lot of other people well. There's a long list of first-tier customers. And increasingly the car companies are the customers. So you need to know the car companies. They're the ones worried that the battery supplier won't be able to get enough raw materials. So the car companies, for us, the car companies are critically important. Lots of customers, so no particular worry about that.
Are your talks regarding offtakes with global companies like LG, BASF, et cetera, involve both US and European shipments in one contract?
It's a great question. One thing we make clear to people is there are a lot of people who are investing who have invested more rapidly in the last year or two in Europe, given political pressure to do so, and given the CO2 emission penalties over there are stricter. So there's a massive amount of investment in battery capacity and cathode capacity. It's going to come to the US, just there's a little bit of a lag. Some of the big Japanese trading companies have suggested Europe's the best target market for us for the first few years. We'll see. We can get material there less expensively than the Chinese can. A number of the customers, I think, would prefer to have an American source. So we're very much USA focused, and I think in the long run, all of our material will stay within a very short radius of our plant, but supplying to Europe is something we do talk about.
Okay, last question. Do you see any competition from any mines in Canada in the short or long term?
Yeah, so listen, if you heard what Elon Musk said at Battery Day, I think he said that Tesla will need 3 terawatt hours of battery capacity by 2030. That's at least 2.5 million tons of lithium for Tesla in 2030. The whole world produced 350 this year. So let's assume Tesla doesn't have 100% share. You're going to need multiples of the lithium currently being produced. You're going to need our project to be a success. You're going to need a number of projects in Canada to be successful, including Sayona's OTA project. And you'll need projects around the world. It's just going to need to happen. And I think it will.
And demand will beget demand, since everyone will
100%
shift.
Yeah.
I want to thank everyone for tuning in, for your great questions. We'll be queuing you for feedback. Please share it, and it'll get its way to Keith. And you can access this program in about an hour, the replay at www.amvestcapital.com/webinars. With that, Keith, why don't you close this?
Well, thank you. I think the questions were outstanding. I'm really happy to have had the opportunity. Thanks for offering it to me. Good to see you guys, and look forward to speaking again.
Excellent. All right. Bye now.
Bye.
Thanks.